Hey, this is Ted Steinkamp with Advanta IRA, and welcome to today's webinar. It is September 4th, Thursday, the couple of days after Labor Day weekend. Trust everyone had a restful and relaxing holiday weekend, and we're all back to the regular grind. So what I wanted to do today is conduct a webinar. And I always try to look for engaging and interesting material and speakers. But I ran across one particular gentleman, Jonathan Coleman, and he does some very interesting things out there. I thought it'd be great to bring him on because in the current real estate environment, particularly with rental properties, it can be kind of challenging. And what Jonathan is doing out in the marketplace, I thought would be very good for all of us to learn about. So with that said, let me just walk you on through just a quick intro here of what we're going to cover, a little bit about Advanta IRA, and of course, how we're going to be going forward and doing a few things. So just a little background about me. I'm here at Advanta IRA, been here a little bit over a year, but have over 35 years of experience in the financial services industry. Just when I think I have seen and heard and learned it all, something changes, and we do have more changes coming down the pipe over the next year with the new presidential administration and their new agenda. So some things will be changing, some things will remain the same, but nonetheless, it is never stale in this business. And of course, my contact information. If you do wish to get in touch with me for whatever reason, feel free to take a photo of this slide. And if you don't worry, I'll give you another opportunity at the end of the presentation. One thing about today's webinar, as always, I ask everyone withhold questions until the end. It's okay to type them into the chat box. I'll be taking a look at those, and Jonathan and I will be doing Q&A at the end of the presentation today. And of course, all of our presentations that we do for the webinars, we do record these and place them on the Advanta IRA website and also on our YouTube channel. On the Advanta IRA website, it's advantaira.com, and just go to the events tab and you'll see the library for the webinars. And of course, YouTube, just type in Advanta IRA into the search box, it'll bring you to the channel. Quick disclaimer that I need to go over here, satisfy the compliance department, and I'll give you the Reader's Digest version of the Reader's Digest version. Bottom line, Advanta IRA is not making any representations and warranties or endorsements about the products or the speakers that are presenting, and we do not provide any tax, legal, or financial advice. You'll need to seek that from qualified advisors. We're just purely the custodian that's going to hold your investments. We are subject matter experts in that area, but just not in the tax, legal, or financial advice area. A couple of quick things about us here at Advanta IRA. We've been in business over 20 years. We have a very deep bench of talent, hence why we are subject matter experts in the space. We have on staff employees with legal backgrounds, MBA, some are CFPs. Many of them have the Certified IRS Services Professional designation. And what you will have in that regard is the very qualified and competent individuals that will be able to answer whatever IRA questions you may have. Also, too, we do business all across the country, all 50 states. We have over $3 billion in assets under administration. And we work with a network of trusted CPAs and attorneys and can certainly make a referral if that is necessary to help you out with your needs. The other thing too, with all uninvested cash balances that are kept here at Advanta IRA, all of those are kept in FDIC insured banks. So everything is kept safe and secure. And of course, we like to keep everything at a personal level. One of the things we're very proud about is having concierge style service. So you have a dedicated account manager assigned. You can give them a call direct. They can help you with your account needs. You don't have to go through an 800 number with an automated attendant, leave a voicemail, and hope and pray you receive a phone call several days later. That's not how we do business. As far as the types of accounts that can be self-directed here at Advanta IRA, basically it is anyone with the or any account with the letters IRA at the end of it, such as traditional, Roth, inherited, the SEPs and the simples. We also do solo K plans for self-employed individuals. And also we do the HSA and ESA accounts. And everything here is all about ease of doing business. It's very simple to open an account here at Advanta IRA. It takes about 15 minutes. You just tap on the link and go through the process. Takes about quick 15 minutes. We open the account within 24 hours. We'll also simultaneously do the heavy lifting on transfers from other IRA custodians. We will handle that process. But if you are doing a direct rollover from a former employer's retirement plan, that's one process we cannot initiate. We'll need your help, but we'll certainly guide you through the process. It's very easy, takes just a few minutes. And while all that is going on simultaneously, we can begin the process for funding your investment. As I mentioned just a moment earlier, we have our learning center that's online. Just go to the AdvantaIRA.com website, and you'll see there the events, the podcasts. And for those of you that like blogs, we do have a few blogs that go on from time to time. And feel free to explore the website. Lots of very useful and necessary content. Now, bringing things on here, what I'm going to do is bring on our guest speaker, Jonathan Coleman. And Jonathan, did you want to do just a brief bio while I bring up the slides for your presentation?
Yes, I'll go ahead and start with my background and expertise. Hi, my name's. Thank you for having me today, Ted. It's an honor to be here with you guys and to discuss private credit and within the real estate industry. I am a licensed Texas real estate broker. I've been licensed in Texas since for about 20 years now, since I guess 2005, 2006, somewhere around in there. The bulk of my real estate career has been on the residential rental side, either as a property owner, property investor, or as a realtor, moving families in and out of rentals, and as a property manager. And throughout that 20-year period, I've seen a lot. I've seen a lot, done a lot, experienced a lot. Some things still surprise me. But that's the nature of the business, and I really enjoy the industry that I'm in. I love the niche. I love moving families. I love helping realtors and love helping landlords find good qualified tenants. So today we are going to dive into the private credit market as an alternative asset that's tied to real estate. And I'll preface with this, there are a lot of different avenues you can take when it comes down to investing in real estate. You do not necessarily have to be a landlord to be profitable in real estate. There's so many different avenues. You can become the bank. You can finance a lot of different types of deals. There are a lot of fund managers that will do a lot of flips on different scales. We've taken a totally different approach to that process, and today's conversation will be more educational to expose the upsides and potential pitfalls to our industry when it comes down to private credit and in the real estate space. So I'm going to go ahead and dive in and kind of talk about some of the slides, but again, most of this will be more educational because it is somewhat of a new niche within the private credit industry. So I want to spend a lot of time discussing how the niche works and how it benefits an investor through their IRA. So go ahead with that. Okay, so what are rent receivables? So the way that we look at that is a lot of times a landlord would have a home on the market, and they are primarily relying on the tenant to pay the rent to help cover the mortgage, or if the home is already paid for, then they use that as income. So the reason why it's such a really good source, because it's secured by tenant rental payments. It's really a short-term contract that you have with the tenant. It's generally for 12 months. Tenant has a fixed start date, a fixed end date, and a fixed number of amount of rent to pay each month. So that cash flow becomes very predictable for a landlord. And if you've done your due diligence as a landlord and used a really good service to help you qualify that tenant, it helps to keep that that asset less volatile than a lot of other ways that you can produce income for yourself. Next one for me. There you go. Thank you. So, so how does all this really work, and how does the rent back process really flows into a portfolio for an investor? So again, like I said, the tenant rental payments are on fixed intervals. We know that on the first of the month, this amount of money is supposed to be deposited into the account as rental payments from that tenant, and it's a monthly recurring income stream that, as long as the tenant performs as expected, you really don't have any hiccups with it. So the good thing too about this entire process with most private credit funds is that instead of relying on the tenant to pay the rent every month, if you invest into a private credit fund, then the risk of default is spread throughout the entire portfolio. So if one tenant defaults or pays late, it doesn't necessarily impact everyone else that's invested into that fund, because the risk is shared, and that's why it's such a better process to go through than to have all your eggs in one basket, relying on that one tenant to pay that one mortgage, pay that one rental payment, so you can pay that one mortgage, or have that income to rely on. So when you invest into a private credit fund as an alternative asset, then the big benefit is that those funds are spread throughout the entire portfolio, and the biggest takeaway with that is the risk is also shared amongst the entire portfolio. So as long as the portfolio manager is doing their due diligence with vetting every tenant that comes through, then you minimize the risk of default that way. And again, this is secured by a binding lease, a binding contract. So what we like to do on our end is we like to make sure that every tenant is highly qualified and highly vetted. Unfortunately, some tenants don't really fit the portfolio because either they have a history of late payments, or a history of or a recent eviction in their background check. Those are the types of things that we kind of look out for to make sure that we aren't putting the portfolio at risk by pushing through a tenant that really would not qualify. So when you're looking at alternative assets, one of the things you really want to look at is what is the vetting process for the portfolio manager to make sure that the principal is secured and there aren't any issues, and how are the issues mitigated when there are some issues. And we'll kind of touch on that too, to kind of give you a background of or some more ammunition to put into your process when you are looking to invest into these alternative type of assets. Next slide. So why is a lease so important? Again, for us in Texas, we really rely on that lease agreement. And for all the realtors that are in Texas, we use the same lease agreement. So it is a very standard document that holds up really well in the eviction court. So we really harp on that when we're taking on landlords as potential clients. When we want to manage a home for them, we strictly adhere to that standard lease agreement. And the good thing for us here in Texas is that all the realtors use the same lease agreement. So it doesn't matter whether it's a single family home or a townhome, condo, multifamily. we pretty much use the same document all the way through. And again, the lower court judges are very, very familiar with this form. So it helps us if we ever have to go to court behind a non-payment issue or a lease violation. The judges are very familiar with it, and it makes presenting our argument a lot easier because of that standardized document that we have in place. The rental payments are not tied to the stock market, and they're not seasonal because we have a contract, and in that contract, it states that the tenant pays X amount of dollars every month on the first of the month, late by whatever date that's in that agreement, and that's how we help mitigate the volatility of the stock market because we aren't tied to it. So, and that's another huge benefit. So it doesn't matter what's going on with the administration, or if Facebook had a bad month and they're pulling the market down, not tied to the stock market at all. We have a fixed contract in place, and that is another huge benefit for when you're dealing with alternative assets that are not tied to the stock market. If you sign up through your IRA into the fund, you have a fixed amount of income set that you can expect every month or every quarter, depending on how that IRA manager is set up. So, and that's a huge benefit for you because we know that every time there's an administration change, that does have some type of impact on the stock market. You just look back a couple of weeks ago, or really last month, when the president was implementing all of these tariffs and what it did to the stock market. Again, because we are not tied to the stock market, and most alternative assets are not tied to the stock market, we don't have to deal with the volatility. So if your PPM states that you will receive 8% per year, then that's what it will be. It won't be anything less than that because that's what the contract, what the PPM states. And again, no matter what happens with the economy, everything remains the same for you. Each lease has a fixed start date, fixed end date with a determined rent amount that will be paid out to the fund. And again, it keeps everything steady. So a lot of the investors that are in the fund, they rely on the stability of the returns because this is their retirement income. And they don't need any fluctuation with that, nor do they have enough time to recoup any losses that may come because other assets are tied to the stock market. Next slide. So again, we like to look at this thing as a very, very solid short-term strategy. So all of the leases are really tied for 1 year with that tenant. The tenants are usually well qualified when you're dealing with an alternative asset. You want to check with the fund manager to see how they're vetting these tenants. What does the process look like? How are they securing the principal for the investors, and what are the stopgaps that they have in place just in case something goes wrong. Within our fund, we actually have two stopgaps. One is the security deposit. We withhold that. So if the tenant does default, we have that. We have those funds that are set aside to help us make sure that the fund can continue to perform as expected. And again, like I keep saying, it's really, really not tied to the stock market. So it doesn't matter whether we have an administration change or one of the something goes wrong in the S&P 500. It doesn't really matter because the fund is set up the way that it is. And even if a couple of the tenants fail to perform, again, that is spread out through the entire portfolio. So, which helps greatly minimize the risk of default for the fund because of the way that it is structured. So when you are interviewing fund managers with alternative assets that are particularly tied to real estate, those are some of the questions you kind of want to ask to make sure that the principal will remain intact and that there is not a lot of volatility with default. So we like to look at it as a fixed, predictable income because it is fixed because we have a lease agreement in place and everyone knows what the standard is when it comes down to that lease agreement and what's required, and that's how we make sure that our fund performs the way it should perform. And then when you are looking at other alternative assets, you want to kind of dig into it to make sure that they have those stop gaps in place, and those funds are fixed, and you can really rely on that income to be there for you at a predictable interval. Next slide for me. So working within your IRA, the way that we have it all set up is that, again, it's fixed monthly payments and they're made back into your IRA. It's a better tax advantage for you. Again, like Ted said, you probably want to consult with a tax attorney or a financial advisor to confirm all of this, but every investor situation is a little bit different, but there are some tax advantages with using the IRA instead of coming directly to the fund. The security deposits for us are withheld from the tenant when they sign that lease, and again, it's not tied to the stock market like I said earlier. So we have a pretty solid fund that's in place. And when we're looking around and speaking with other fund managers, we want to make sure that we're going in the same direction as everyone else within our niche, and that we aren't major outliers. And we're making sure that when we are talking to other fund managers, that they aren't experiencing anything that we haven't seen yet, so we can kind of predict ahead for anything that may kind of go left on us. But most of the alternative assets that I've seen, specifically in the real estate space, you'll find that most of them are not tied to the stock market, and it's a fixed return on your investment. And most of us will offer either monthly payments or quarterly payments. And a lot of times the payments are interest only, that would be available to you within the specified intervals. Next one for me. I think that was about it. So I'm not going to really go too deep into how our fund is set up, because again, like I said, I really wanted to keep this one more educational, because it is somewhat of a niche within the alternative asset private credit space that's tied to the real estate industry. It's kind of a hybrid between a real estate fund and a private credit fund. We've taken the best of both worlds and created a fund that fits our industry and our expertise, and it really works well for the landlords that partake into this process, and the investors that invest into the fund. So we love where we're sitting. We believe that the offer that we have is a very solid offer, and it fits really well into a lot of mixed portfolios when it comes to a fixed asset aspect of your portfolio. So again, my purpose for participating in this webinar was to make sure that I wanted to do all I could to kind of educate the audience on how private credit works when it comes to the real estate side of it. And again, I think that, yes, our offer is somewhat unique for the industry, but our expertise that we have behind it makes it a really attractive investment option for those that are looking for fixed returns, fixed income, fixed assets. So I think I hit every point that I wanted to make. I've checked all my boxes. Finished a little bit sooner than I'd like to, but I think I got it all. And I'd like to leave it open for Q&A. See if you got anything that comes through that I can personally address.
Yeah, and for all of the attendees, please just type in your questions, and I will see them come up. But while we're waiting for questions to come in, Jonathan, I do have a couple of questions myself about kind of the overall process and what you're trying to accomplish here, you know, as it relates to self-directed IRAs. Just kind of my past background in banking. How does something like this differ from like a factoring arrangement, or maybe just a landlord being able or not being able to approach a bank to borrow against their rent receivables?
Sure. So on the banking side of it, banks are really not accustomed to lending on receivables like this. I've heard from several landlords it's very difficult because, I mean, the process is tedious. They need an awful lot of paperwork, and it really depends on the size of the financial institution. will kind of dictate how deep they want to go with what they're looking for. We found too that a lot of landlords, or we kind of consider them as accidental landlords. Um, they either had a job transfer, didn't want to sell the house, or had the house on the market and could not get the price that they wanted for that house, or they just want to hold on to it. They may have a temporary job transfer and they don't want to sell that house yet. So again, accidental landlords. We find that a lot of the landlords that use our platform are first-time landlords. So it's very difficult for a bank to lend on something like that. And again, the process is tedious. Our system is set up to where we can fund pretty quickly once we've vetted that tenant. And it's not based on the landlord's income or landlord's credit score. We look at the tenant. We're focused on the tenant's income, their source of income, and their rental payment history. And if that passes all of our due diligence, then we can typically move forward with funding that landlord. So when a landlord signs up with us and they want to take advantage of receiving funds with us, we typically pay that landlord up to 11 months of rent. So we would withhold 1 month of rent plus a security deposit. And as the tenant pays rent, they pay rent back into the fund. Interest payments go back into the investors, and we withhold everything else if there's anything that's left over to make sure that the fund stays solid. At the end of the lease term, we usually reach out to the tenant and the landlord to see if they want to renew. If they want to renew the process, or if they want to renew the lease first, and then whether or not they want to, if the landlord wants to renew for another year of funding, and then we just keep moving from there. But the difference between us and a financial institution, no matter which size the bank is, our process is a lot easier for the landlords to slide in and receive funds from us.
So there's not too much of a concern about the size of the transaction, correct?
Correct. And I'll tell you this, the average rent amount in Texas is right around $2,200 a month. So that's kind of where we fall with our process. As we go through and we're vetting tenants, we see that a lot. So that's about the average, no matter what market you're in Texas. We're pretty much working all four of the major cities: Houston, Austin, Dallas, and San Antonio. Houston, Austin, Dallas, San Antonio, and the rent rates are really roughly around the same.
So you're basically in the higher growth markets, correct?
Um, I really wouldn't say that. I mean, I would classify it as uh, a lot of the landlords we've used, they've been with us for a while in one form or fashion. So um, I kind of look at it as we've developed relationships with these landlords over the years, and the realtors that work with them. So
Okay.
I look at it as our industry is pretty stable. We see increases in rent from time to time. Sometimes we see a little decrease in rent, and I constantly check the data through all the markets because it's sitting right there for me. We don't see a lot of spikes in rental histories in rental rates anymore like we did like 4 or 5 years ago, when especially in Austin, when the big tech companies started moving there, like Google, Facebook, and Apple, and all of them. After that market settled down, and everything kind of settled down. So um, the rent rates stay the same throughout the market. The thing that I do like to see is when the interest rates go down, tenants don't necessarily go buy. Sometimes they do, sometimes they don't. But we do see some investors buy more houses. Then they add to the inventory, and they buy brand new houses. So as new communities are established throughout the four major markets, we see those investors buying those new houses, and they buy them because the builders are offering all types of incentives, and they can really bank on not having any major issues for the first 3 to 5 years with that house because everything is new.
Hmm. Okay. And here's a hypothetical. Say you have someone in the fund, they're an IRA investor. They're focused on income, which we're seeing more and more of with the market changes these days. Not as much focused on capital gains. But for those that are focused on income, how stable is the client base and the income generated from them, and say like in a situation such as just a general economic recession?
Right. So it depends on how deep the recession is. Um, we did well through COVID because tenants were still employed and they were still paying rent. So when you look at our industry and the niche that we're in, we're kind of recession proof. We haven't had an issue in my lifetime, well, other than Hurricane Katrina, that wiped out the market. That really doesn't happen for us. Even if we end up with a hurricane here in Texas, it's not going to take out the entire city of Houston. And because we're spread out throughout the state, we don't take that much of a hit. So we don't see that much of a dip in inventory with the change in the economy. Tenants still need a place to stay, and as long as they are gainfully employed, they will continue to pay that rent. So we kind of realized that a couple of years ago that during COVID that we're kind of recession proof, and it doesn't matter what's going on with the economy, the tenants will still pay their rent. And we've been very fortunate to be in the niche that we're in because we don't have that issue. So it's not really volatile. The thing that we do like to see is that during the summer, everyone's moving. So we do get an uptick in the amount of inventory or the amount of background checks that we're running through our systems. But after the summer, it kind of just stabilizes after that because the kids are back in school and everything starts to go back to normal. So again, it's a good thing a good investment for those that are relying on income because it's not tied to the stock market, not tied to the economy, and going through COVID proved that for us.
Okay, way cool. And if anyone has any questions, by all means, please tap them into the box and I'll see them. But Jonathan, just overall, where's really the strength with what y'all are doing for the self-directed IRA investors? I mean, is it solely going to be focused just on the income and the stability of it, or might there be other aspects?
Right now, that's what we're focused on. We want to make sure that we retain that principle for the investor, and we have a lot of checks and balances and stopgaps in place to make sure that we continue to do that. The last thing we want to see is something that goes way left on us that will negatively impact the fund. And by us being more diversified and spread out through Texas, and we're branching off into Orlando and other parts of Florida pretty soon, that helps spread the risk throughout the portfolio. So, like I said during the presentation, uh, with our fund, like a lot of other alternative assets, um, the risk is spread. So if a handful of tenants pay late or they default, it doesn't necessarily negatively impact the entire fund. So and we built it that way to make sure that the investors stayed whole throughout the entire process. If they decided that they wanted out of the fund, then it wouldn't be an issue for us because everything's been intact, and we hope that they're happy with the services that we provide. So, but one thing I do want to stress is that when we are looking at extending funds to a landlord, that tenant is heavily vetted, and we only extend out to those tenants, to those landlords with highly qualified tenants. So for us, tenant has a minimum credit score of 680. We verified the rental history. There weren't any infractions. They always paid the rent on time, and they are gainfully employed. So and then based on my experience, if there is an issue with one of those highly qualified tenants, they have resources to kind of get things back on track. And even if something happens where they've been temporarily let go or laid off, they have enough resources in their bank account to cover the rent until they get back on their feet. And that's one of those requirements that we look at when we are vetting the tenants. And that's why the requirements are a little bit steep because we want to make sure that there aren't any issues. Now, I'm going to say that just because the tenant has a 680 and above credit score, that there won't be any default. Yeah, sometimes there is some default there, but again, those tenants are very credit conscious, and they would do everything they can to get back on track as quickly as they can and to maintain that good credit rating. So that makes the fund a lot stronger, and it reduces the amount of default that we would see had we gone down to, say, a tenant that's got like a 550 credit score. And I'm not saying that tenants with 550 credit scores are bad tenants. They just aren't as credit conscious as the ones that have a 680 and above.
I understand. Have a couple of questions that poked in, and still staying on the subject about tenants. How long would a tenant have to be in place, or what length of time would a tenant need to be in place before they'd be considered qualified?
Well, we do the qualification prior to. So even for landlords that don't want to, that aren't in the fund and they aren't looking to take funds, we still vet those tenants for them through our other services. So we don't recommend a tenant that to a landlord that we think the tenant will not perform. So and that's why we're verifying employment, we're verifying income, verifying rental history, running credit scores, running criminal background checks, and having checks and balances in place to prevent the tenant from approving a tenant that has a high risk of default.
Okay, so what length of track record? Like perhaps a year, longer?
Well, we do 2 years of rental history, and
Okay.
the employment, it doesn't matter because a lot of times we see renters coming through with a new job offer, and they just transferred into Texas with a new job offer. So as long as we can verify the employment, we go with that. But more importantly, that rental history, that we go 2 years back on the rental history.
Okay, so you're looking back 2 years, and then of course verification of employment, and just I guess pull a current credit report to make sure they're still financially stable. Correct?
Exactly. Yes, and then we're also doing a criminal background check as well.
Okay, good deal. And as far as the one question that was asked was, as far as the size of the fund, what size is it, and what has the recent growth trajectory been?
Sure. I'll kind of touch on that a little bit. We just launched the fund a couple of months ago, and the growth has been pretty steady so far. We see that we are anticipating that there will be a little bit more growth based on the marketing efforts that we are doing. We think that the biggest growth will come on the second year with the landlords. So once they're in for the first year and you see how everything went well with them, and then we anticipate them renewing for another year. The other thing I forgot to add was that we are also managing those homes for those landlords. So if anything goes wrong with that house or that tenant, we are the first ones to know, pretty much first responders for it. We took that approach because a lot of the landlords are, like I said, accidental landlords, are first-time landlords, and they are not familiar with the leasing process or managing homes. So we've taken that burden from them to make sure that we know what's going on, because the last thing we want to do is hear from a tenant that they didn't pay the rent because the landlord didn't fix the AC, and we're in Texas, so that's a big no-no. So if we are managing the homes like we are doing with all of them that are in the portfolio, then we have access to mitigate anything as quickly as we can. All the vendors that we use are vetted vendors, so we are making sure that they have the proper insurance in place before we send them out to a home to do any kind of work. So again, the growth for us will come on the renewals with the landlords, and then again, we are doing a lot of extra marketing with a lot of landlords, joining the Real Estate Investment Association, known as RIA, and we will be heavily involved in that process with them, and it'll be a good partnership for us with the local RIA associations. And as we expand into Florida, we'll do the same format because it's proven to work.
Okay, so in other words, if I interpreted what you're saying correctly as it relates to the question, what you're doing with the landlords and the tenants as far as being able to provide some financing there on the rent receivables, this is in addition to other services you're performing for the landlord, such as property management. Is that correct?
Exactly. So we also have a rent collection service. A lot of landlords use our platform to collect rent. I'm not a big Zelle or Venmo guy, because those platforms cannot automatically attach late fees if the tenant is late. So right now we're currently collecting roughly around $2.3 million a month of rent through our platform. We process about roughly around 400 applications, lease applications per month, vetting all of those tenants for those landlords. So we play very heavily on the leasing side, and for us, we want to make sure that the landlord is approving, or we're helping the landlord approve a tenant that will perform as expected, so they don't have any issues. We do offer an eviction service that we do in-house, so we have all the pieces in place in case something goes wrong. We can jump on it quickly to help minimize the blow to a landlord. So even though some landlords are not in the portfolio, we still have other services that they take advantage of.
Okay, way cool. Well, that kind of exhausts the questions at this point, Jonathan. Was there any final comments you wanted to end before we wrap this up?
I'm not a financial expert, but what I've seen is that it is always best to go through an IRA when you are invested into a fund, especially one of alternative assets and tied to the real estate one as ours is, because it's just a better tax advantage for you. You can still utilize the fund as a source of income, but again, the tax advantages are probably in place for you, and everybody's financial situation is different. Everybody's at a different tax bracket, but from what I've seen, it is the best way to go. So I highly encourage any investor to go through an IRA before coming straight into the fund.
Okay, good deal. Well, I'll tell you what, this is, for me, this was very interesting. Having been in banking and dealing with landlords who need to get the advance against receivables, because it is very much a needed service. Can't tell you how many loan requests I turned away over the years.
Right. Yeah.
But,
Banks are not designed for that.
no, and there's some loans they just don't want to do, and some loans are just too small for them to even bother with it.
Right.
So I've been in that position before as a banker. I just had one final question pop in. When you advance against the receivables, what is the underlying collateral?
The underlying collateral is the lease agreement. So that is the binding contract that we adhere to. If something goes wrong with that tenant, we always refer back to the lease agreement, and that is a process for us. So if we have to file an eviction for a tenant, I think of the several hundred cases I've done, I think I've only lost maybe one because the lease agreement is solid, and that's what we adhere to.
Okay, very good. And any other questions before we wind this out for the day?
None on my end. I think
Okay.
I've hit all the points. Again, I wanted to make sure that this was educational and not really salesy, because we are in a very, very unique niche. It's always a good idea to do some educational background with what we're offering. And if you have any other questions, you can always reach out to me. The website is 10bridgecapital.com. It's T in like 10. You can always reach out to me there if you have any questions, and we're here to help, and we can walk you through everything. We love working with Advanta. The team over there is great. They've been very responsive to everything that we've asked for, and we hope to continue on with the partnership.
Great. Always appreciate the kind words, Jonathan. I have my slide up on the screen if you want to get in touch with me, either to get Jonathan's contact information or whatever. Feel free to reach out to me. My email address and phone number is up on the screen. So I'll tell you what, this is the Thursday after Labor Day weekend. It's a short work week for all of us. So why don't we make this a slightly shorter webinar than the usual 1 hour, and let's get caught up on the things that we missed doing on Monday. So with that being said, I wish everyone a great and productive remainder of the week. Have a fun weekend, and we'll see you on the next webinar.
Yeah, thanks for having me.
Take care, and thank you, everybody.